Hi, good afternoon, everyone again. So it's Daryl at the CVCA. It's 3 o'clock and there are over 100 people registered. We're just going to give a minute or two for everyone to sign in before we start. Thanks for your patience. So good afternoon. We are going to get started. We have over 100 members. So welcome everyone on the call. And as we proceed, we're probably going to get more members joining in. As I said, over 100 members registered today. So that's great. What we'd like to do today, I've got a few people in the room with me. We're going to cover the 2019 highlights for private equity, move to venture capital, and then Raymond will do a quick demo for our new platform, CVCA Intelligence. We do have Q&A on the agenda. However, due to technical limitations, we're not going to take Q&A on this call. All right, so in the room, I have Kim Furlong, CEO of the CVCA here with me, and Raymond Luck, the CEO of Hockey Stick. You probably all know the three of us, if not met us in person. So this is the first time we're doing a webinar to release our year-end results. And we'd love to hear your feedback after the call, whether this is something you would like us to continue doing. So we're going to start first with private equity. And before I get into the slides themselves, I will say that everything we say on this call is going, sorry about that. So everything we say on this call, all the analysis and the discussion and any opinions we share on this webinar are not for publication and are off the record. The full results will be published on March 11th. And we ask all the members on the call to withhold disseminating any details of this webinar until after 6 a.m. on March the 11th this week. Okay, so what Kim and I are going to do is, as we go through the private equity highlights, we're going to tag team and have a conversation about some of the things we've noticed as highlights. And then the full report will contain far more details on Thursday of this week. So Kim, let's move to the first slide here. What we're looking at is quarter over quarter activity. Both the number of deals and the total dollars for private equity. Anything that jumped out at you from looking at the results this year?
Well, I was really pleased to see that we landed at the end of the year with 19 billion. You'll remember that when we were at our mid-year results, the amount of PE dollars that had been deployed in the Canadian market this year were a bit lower, but with the sale of WestJet and Garda in Quebec, we saw a rebound, bringing us at the $19 billion mark, which is close to the historical average. I would say usually Canada sees about 20 billion year over year invested in private equity, and we're at that same level. That being said, those two deals surely helped at the end of the year.
Absolutely, and I will also make the point that besides those two mega deals, there were 25% of all the deal flow were in buyout deals, and 20%, so a fifth, in PE growth deals. And for us, that's a very important segment. We're on a PE awareness campaign this year. The growth segment is one that hasn't got a lot of attention, but we're really putting attention on it this year. Anything you want to care to share about that story?
Well, it's a really interesting portion of the dollars deployed when you think about the narrative that comes out of Ottawa and their interests in growth companies. We'll talk about VC in the second half of our report, but that growth story and the capital that flows to grow companies is something that is very high on their radar. It is a mandate that they've given themselves as a government to ensure that we see more growth and that Canadian companies scale. And we will be taking some time this year to really showcase. Every month we have a spotlight on a growth company on CVCA Central, and really taking the time to really speak to that growth component, both in the VC and PE space.
Excellent. And I will add, Kim made this point a bit earlier in terms of private equity being fairly stable for the last few years. The average deal size in private equity bears that trend out. It was 36.1 million in 2019, the average deal size. And compare that to the 5-year average from 2015 down to 2018, and it was 35.7 million. So fairly flat, both in deal size as well as total dollars. You're looking here at the top 10 disclosed private equity deals. And if you exclude those 3 mega deals, $1 billion plus deals, the sweet spot for Canada, and we'll get to this a bit later, really is the mid-market deal size, anything less than $500 million. And Kim made the point about growth. The last deal in that table, JDL Lag, is a growth deal with a lot of operations in northern Quebec. Sector-wise, Kim, anything that struck out at you here?
Well, traditionally, private equity has been mostly industrial and manufacturing. What I like to see is that growth in ICT. When we look at that space, it's important to see PE operating in that space, and that number in 2019 has grown. And while industrial and manufacturing and our mid-market capacity are great, and we do want to tell the story about how private equity operates across Canada and smaller communities, being able to still speak to that footprint from coast to coast to coast to the ICT growth, and I'll use sexy quote unquote story of how these tech jobs are coming out. What does private equity play in the role of that second phase of mature company financing? How that grows, to me, is an interesting narrative to follow.
Yeah, and I will underline the point you made, and that is if we go back to 2013, this picture, sector distribution of private equity investment looked very different. The resources sector, so oil and gas and the mining sector, got a 27% share in 2013 of all private equity investment. That was only 7% in 2019.
Yeah.
So huge drop there. But what we know is our private equity members are pivoting, and a lot more investment going into ICT, which historically is very unusual for private equity, but that continues to be a trend worth noting.
It goes back to that growth keyword.
Absolutely. Now, the exits for private equity didn't look all that great this year. We haven't had as many as last year. I would use the word anemic, but for you, Kim, what are you seeing here as far as private equity exits?
Well, the M&A world continues to dominate. The absence of IPO is something that the media has paid attention to, and even government. Things staying private longer and the secondary buyouts as well continue on that trend of private staying private. Now, to me, as long as the companies are in good health and they're staying in Canada and they're growing, that indicates, that regardless of the exits being there this year, the flow of capital is there, and there's still a lot of great opportunities in private equity in Canada. So I'm not too worried about it, but at the end of the day, exits are important because that's how capital flows back to investors.
Yeah, I mean, I'm taking nominations for our CVCA awards this year, and I'm seeing, at least based on very confidential numbers, some great returns from some of the exits.
Yeah.
And we're meeting tomorrow to pick the winners on those categories. So even though we haven't had a lot of private equity exits, the quality of those exits have been extremely high.
Yeah. Well, when you look at intellects, right, a key point or a key story about the value of that deal it was fantastic.
Absolutely. Okay, we're going to jump over to venture capital. Now, this is a really good story for 2019. Everything seems to be on the rise compared to previous years. What's been the highlight for you, Kim?
Well, and it's interesting. I spent some time with the Globe and Mail this morning. They received our data under embargo, and they were asking me like my reaction to it. I do believe that we've come to a point where the growth rounds that we were doing well mid-year, but what happened in the third and fourth quarter really solidified the results that we saw. I thought midway through the year that we would beat the $5 billion mark. The fact that we landed at $6.2 billion is fantastic. It is a reflection of dollars flowing in to that asset class, but it is also a deployment of the Vicky dollars coming to fruition and us being able to visualize that. For the first time this year, we will have pushed out growth venture capital numbers. We're at 1.72 billion in growth, and to me, of that 6.2 to have over $1 billion in that growth category, again, signifies that companies are scaling here, and that the flow of dollars that are entering these companies is significant enough to see them continue on their road to their journey of becoming more mature.
Yeah, I would completely echo what you've said. And for me, the startling thing was not startling, a surprising thing was that it's the third quarter in a row that we've hit $1 billion invested in VC. That historically, that's pretty amazing. I'd love to see a Q1 that has that level of investment.
Mm-hmm.
And it really has helped reach that $6 billion mark, which I haven't seen since I've been in the industry.
When I look as well to the growth investing that we saw, the beauty of a company like Verafin in Newfoundland that saw the highest round at 515 million also signals that you can build it anywhere. And if it's a great company, it's got great potential, dollars will flow to it.
We've seen quite a few examples of exactly that, the regionalization of VC I think of Vendasta in Saskatoon that received a big round earlier this year. And that's very encouraging because the typical hubs, Montreal, Toronto, Vancouver, tend to get the bulk of the dollars. And it's great to see companies thrive in other regions.
Yes.
You were out in the Prairie region earlier this year. I'm sure you heard a lot of success stories when you were there.
We did, like from Coconut Software, and also like even those Skip the Dishes is attributed to Winnipeg. The founders are from Saskatchewan, and they're giving back to their ecosystem. Like you see them coming back and mentoring a new generation of entrepreneurs, and Collabs in Saskatoon as a really distinct and narrow mission of creating one Series A company per year. And I really think that when you see these ecosystems maturing and having very specific mission-driven goals, that it doesn't matter where you are in Canada. Of course, the big centers will carry the bulk of the financing. And we were discussing this morning the $1 million venture in Yukon for the first time this year. So if you build it and if it has value, the flow of capital will come to you.
Now, along with the growth that you see on the slide, what we also noted from here is the average deal size, which is a key indicator in terms of how much money is flowing into these companies to help them scale. It's incredible to see the increase in that. So this year, the average deal size was 11.6 million. And if you compare that to the 5-year period prior to this year or last year, it was 6.1 million. That's almost double.
Yeah.
Right. So companies are not only getting VC financing, they're getting larger checks, which really helps them scale and grow faster.
Yeah.
I'll make one more point about this slide. And what's not included in these numbers is VC debt. Now, we know from what our members tell us and the data itself that VC debt is a growing asset class. And there were 111 VC debt deals done in 2013, totaling 177 million. Now, that doesn't amount to a lot compared to these numbers here, but remember that VC debt deals are going to much smaller scale companies, and the check sizes are much smaller as well. But it is certainly a trend we're continuing to monitor.
What I like from that trend, Daryl, is that entrepreneurs and companies have an array of opportunities or offerings to them when it comes to sourcing capital. If equity is not something that they're looking to give, there's still capital available to them to grow.
Yeah, choice. I mean, that's the beautiful thing about the ecosystem right now is that if you're an entrepreneur, you have lots of choice in terms of financing options. All right. Now, the big focus whenever I talk to people is they all want to talk about mega deals. There's certainly a story in the 2019 number with mega deals. I'll let you go first. Anything you noticed about these mega deals that happened? You mentioned Verifin already.
Yeah, well, there's two things I will say. I love the fact that they are all across the country. So you've got them in Quebec, you've got them in BC, Newfoundland, Ontario. So there's a distribution of success across the country, and that I like. And then the second thing, with my background prior to coming to CVCA, is life sciences. Like the successes that we saw this year, there was a piece about a couple months ago about all of the unicorns in Canada, and 4 out of 10 were life sciences. This year, when you look at the top deals, Repair Therapeutics, Infusion, 140 million in one, 109 in the other. Those are large financing rounds, and they're in the seed level, early stage, or Series A, I should say. So large amounts of dollars, and so there's something going on in life sciences when we think about Arenia, Zymeworks, like companies that have gone public, plus the success we're seeing that and we'll talk about IPOs, but milestones. So we won't dive into it, but just that trend of dollars flowing to life sciences. And it is a very niche investing market. There's a few members that do it in Canada. What I think that story tells, and what we'll be doing as an organization, is talking to limited partners about the potential that they may be missing by not looking more carefully at that vertical of investing.
You made the point earlier about VC dollars clearly flowing into our system. Is that something you think is contributing to these larger deals and the scaling effect we're seeing?
They're generally or in life sciences?
Generally,
yeah. I do think that our GPs I've leveraged the access to Vicky dollars to fundraise larger funds. We're also seeing, like, it's worth noting, the Georgian closed this year at close to $1 billion in Innovia. So we have some strong and big players, and a mixture of that plus our GPs going back for, third, fourth funds. We're still a very early industry when it comes to venture capital. If you compare us to the United States, for instance, that would be in their 9th and 10th deal or funds. But Vicky and the flow of sustainable capital in Canada is something that CVCA is committed to, and the conversation we'll be having with the government this year in terms of ensuring that while we saw $6.2 billion deployed in Canada this year, we're just getting started. Like my ambition is to see $13 billion deployed on an annual basis, which would be 1/10 of what we see in the US. It may be ambitious and it may be visionary, but I think we can't stop here. Like, this should not be our high watermark. This should just be, just as we move along on our journey.
Yeah, there were 28 mega deals, by definition, 50 million plus deals. And of those, 5 were over 200 million. We haven't seen, in the time we've been tracking statistics, deals of that size. In fact, over that time period, there have only been 2 deals over 200 million. Mm-hmm. And this year we've had 5, or last year we had 5 over that mark. So the scaling effect, we're clearly seeing that happen with some of these larger companies.
It's worth noting as well that if you look at Verifin and 1Password, you're looking more into the fintech space, Touch Bistro, Clio. Like, it's not one sector. Like, people may call it ICT, but it's not like one dominates. So it gives us some diversity in the terms of companies that we're seeing grow and being built by Canadian entrepreneurs, which is also very healthy.
Absolutely. Now, that's not to say on the lower end in terms of deal sizes that there's no activity, or rather these mega deals are happening at the expense of early stage deals, because 59% of all deals in our 2019 data were less than $5 million. So really there's much more activity happening on the smaller end of the spectrum.
Yeah, which is good. You have to feed that pipeline of opportunities.
Absolutely. And I know we're starting to look more at jobs and what kind of employment these companies create. This top 10 list, if I added up all of the employees at these companies, it totals 3,257. So a significant amount of money being directed towards job creation as well. And I did have the number for private equity. It was literally in the tens of thousands there as well. So I think that's something that we will continue to track and report on.
And for the members that are participating in this webinar, I do think that as an industry, we have to spend more time tracking employment numbers and speaking about the impact that we have on job creation and our GDP, or our contribution to Canada's GDP, and really telling the story about why private capital matters to our economy. And that metric really resonates clearly with politicians, but even with the media and the public at large.
Yeah, I mean, this is not something we report on, but I did ask David to check these top 10 companies to see how many of them were female founded. And 2 of these, Element AI and Repair Therapeutics, had female founders. It's worth noting. Okay, sector distributions. No surprise, ICT got a bulk of the dollars this year. And as you made the point, right, it's not just one big sector. There's subdivisions there, which we don't report on, but nonetheless, fintech was a big recipient.
Yeah. We already spoke about life sciences. Clean tech, I believe, will receive a lot of attention this year. When we spend time in Ottawa, Matt Ivis and I, there's always questions to us about the potential of clean tech, and it really much aligns with the government's narrative and the need to find solutions to move away from fossil fuels. And we should see their attention and their focus stay in that space. And we have some funds, I can think of a number of them, that are operating really well in that space. It still captures only 7% of the distribution of VC dollars, but I wouldn't be surprised if we saw that dollar grow in the years to come.
Yeah. I mean, smaller in scale relative to the share by ICT and life sciences, but clean tech actually grew 46% compared to the year before.
Interesting.
There were a growth year over year from all the sectors. ICT increased by 67%, 73%, life sciences by 67%, and agribusiness by 18%. So right across the board, a great year.
Mm-hmm.
Okay, on the exit side, I mean, we had a unicorn happen in 2019, Lightspeed.
Yeah.
They've been getting a lot of media attention since they went public. It's great to see. We've only had 3 unicorns since we've been tracking our stats in 2013. What do you make of that?
Well, and the founder, Das of Lightspeed, has a really clear message about his vision to grow his company, and it's global and it's big and it's ambitious. And I do, we were talking about this a short while ago, Daryl, when you can see it, you can emulate it, and that success. I do believe that other entrepreneurs that are starting their business, we get that criticism very often that Canada sells too early, that the ambition of our entrepreneurs is, they build it to just pass on in an M&A, and they don't really have that ambition of bringing it public or growing it to size. And Lightspeed is a case in point of what you can build. The dollars will come, to have the ambition and to look at that global marketplace as your customer base.
Many of these names on the list, I've seen them nominated for awards. And once again, underneath these top level details, there are some phenomenal returns being generated by our VCs on the ground. So it's going to be a competitive year for the awards this year. I have to tell you that.
It will be. Yeah. It's I've been in the job now for just a little over a year. And I do remember when we did our Insight series last February, we had the predictions about what we would see in the market. And one of the trends that one of our speakers was speaking about is, we had a big question mark on whether we would see some exits. And he was cautious in saying, if dollars don't flow back to the investors, then you can have all this dollar deployed in companies. But until it returns, you don't really have a sign of a strong and healthy flow in industry of private capital. And this year, he was proved wrong, and we've seen a number of M&A and IPOs, and I do think that is a solid proof point that what we're building in Canada is solid and real.
I never want to end on a negative note, but we've been hearing a lot of negative news outside of our industry that may impact our 2020 performance and activity. Are you worried at all when you watch the news and look at all the headlines?
If I wasn't, I would be abnormal. I think everyone has a sense of what we've seen in the markets since last week and again this morning, conferences being canceled, and just the cautious approach and the risk mitigation that companies and corporations are taking in terms of travel, and it will have an impact. It still remains to be seen whether it will be a short few months or if we're seeing the beginning of something big. That being said, I think for the past year, this is no surprise that everyone expected an economic correction. You would imagine that managing in a downturn, cash burns, managing your companies, how you deal with their boards, and like how you counsel, because I like to repeat over and over again when I'm with people outside of the industry that private capital and VC and P is not simply the allocation of cash. It is the flow of capital and strategy. It's a partner in the journey of a business that comes in to help you, and that our members are thinking about how to manage in a downturn. So while I am worried, I'm also encouraged to think that people have been planning for this.
Yeah, I would say our asset class is long term, and downturns in the market are just part of regular investing.
Yeah.
Right?
And also, we saw a lot of fundraising from our members this year as well. People maybe going a bit earlier than they would have traditionally to raise their next fund. So those dollars that have been fundraised will be deployed, and they're like in any downturn, there's sometimes opportunities. It's just will the consumer base and the purchasing power and the flow of the economy be there? But again, we will all be looking at that very closely, and hopefully what we're seeing in the markets will moderate itself and stabilize, and then we can, build slowly but surely.
Great. I do want to thank all the members that contributed their data towards this report. We've had 64 of our VC members, 28 of our private equity members, and 15 limited partners submit their data. And if you're on the call and you're not one of those data contributors, reach out to me or David or Kim and let us know. We'd be happy to get you on board to make this a much fuller picture. Okay, so Kim, any final remarks before I hand it over to Raymond?
No, I'd like to get some feedback from the folks that did participate in this webinar to see if it was useful. I'm pretty sure we'll get feedback that it would have been great to have some questions. And I would have preferred that as well, to make sure that we can interact, and we'll make sure that the technology, since this was our first kick at the can, that the next time around that we can actually have a conversation. I love the fact that we can share this under embargo with our members and give them a snapshot before it hits the press, and that they see at the same time as everyone else in Canada. So yeah, and the ability for CVCA to be able to speak to those results gives us, puts us in a position of being the spokesperson for the industry, and the media. Like, we had knocks on the door as of like 2 weeks ago saying, when can we see these results? So there's a real interest from the media and in the street to get a sense of how things are going, and we wouldn't be able to do this without the participation of our members. And I'll echo the same words of thanks that Daryl just gave you in terms of trusting us really with your data. Thank you.
Great. I'm going to pass the mic over to Raymond Luck, CEO of Hockey Stick. We've been working with Raymond and his team for the last couple of years, and really proud about how our old database has transformed into what you're going to see next, CVCA Intelligence. So over to you, Raymond.
Thanks, Daryl, and thanks, Kim. I hope most of you on the call know of Hockey Stick. We're the data platform and partner of CVCA. And I'll also chime in and say thank you very much to all of you who did participate by providing data. And that's one of the things I want to do today quickly, is actually show you a demo of the platform that you have access to as CVCA members. What we're trying to do, and working with Kim and Daryl, is to make the data more accessible, more up-to-date, better, more valuable to you. And many of you who are, let's say, on the call, but not necessarily in the day-to-day of data, might not realize what the platform looks like, how it works, and that's what I'm going to do. So let me just switch over to my browser here. And so this actually, what you're looking at here on the screen is CVCA Intelligence within the Hockey Stick platform. And I wanted to give you kind of a tour of some of the things you can do, and it'll give you an idea both of the data that's in here and what you can do in terms of search and looking at funding rounds and companies and investors. So think of this as the collected CVCA data in one place. So if you have contributed over the years and you've never logged in to the previous platform before, I definitely recommend you do that. So what I did here was I kind of preloaded a query on private equity. So I'm looking at rounds of greater than 20 million, and I just picked a sector in healthcare. So this is an initial set of results here. You can pick different sectors, so you can really use it to drill down into a particular sector that you're interested in. And obviously you can pick different dollar amounts. We really designed the system to be both very powerful. You can create as many of these filters as you like, but also really easy to use. So it's not just for data folks. I can do the same query if I'm in venture capital now. I picked something else, which is the artificial intelligence vertical. Just let me make sure that everyone is, okay, that was a question. So in terms of the artificial intelligence vertical, you can see that I've listed a bunch of companies here, but I did want to show you this in particular because Although industrial sectors are kind of the standard way that data is classified, we've really worked hard in the industry to develop more kind of agile, what we call tech verticals. So these will be familiar to you, and Hockey Stick has really worked hard in the Canadian ecosystem to have this very widely adopted, because we believe that if you're an investor with a certain thesis or you're very interested in certain verticals, this really is going to help your search. So in particular, things like fintech or AI, you can really zoom down into those particular companies. So speaking of companies, so what I did earlier was I showed you searching by funding rounds, searching by investors. So this is what probably is going to be the most interesting to people on the call, is using CVCA intelligence as a company research tool. So what I've done here is I've created a search on fintech companies in Canada, but I've added stage, which is scale up. So there's different stages here: early, startup, scale up, and established or growth. So it's another example of ways you can search, and it's quite interesting because in particular, a stage is something that is not necessarily numerical. It's more about where they are in the evolution of their business. So startup, in contrast, is usually associated with just beginning to find product market fit, maybe a seed or Series A type funding. Scale up is where the company is invested more in growth. Not that they're not doing R&D, but the focus more shifts towards growth and scale, and that opens up different kinds of funding opportunities and things that they're seeking. So there's different ways that you can search by companies. Speaking of companies, this is what a actual company record looks like, and I wanted to show this because there's quite a lot of information here that we've assembled. So everything from the stage of the company and the sectors and verticals, sometimes there's multiple verticals, to contact information, the team, the roles, the investors and size of company, and even the affiliated organizations, which is what we call kind of non-investing partners. So everything from regional innovation centers like Mars, universities, programs like the Lazaridis Institute. So all of this is available in the database. You can view the chronology of their funding. I will comment on the crazy color scheme that is designed to show where the data comes from. So some of that data will come from CVCA, most of it here. It also comes through Hockey Stick's own enhanced, both machine and human kind of enhancement services. And we've even added things like US and Canadian patents and the entire federal funding database for federal grants and subsidies. So what this allows you to do if you're researching a company like Dream Payments is view everything in one place. So that's one of the things we've done, and really this is the best database of Canadian companies that's ever been assembled. Similarly, if I flip over to what a fund or an investor looks like, this is obviously a VC fund. It looks very similar in terms of organization, but you'll notice down here there's some other additional things we've been able to add in terms of investment preferences. So your fund may have a preference in certain stages, certain verticals, even certain check sizes or regions. And this is something that is really useful for entrepreneurs and others searching for the fund. So, I'll take a couple of minutes now to just mention that one of the advantages of being part of the CVCA intelligence platform is that if you are Blue Sky Capital, and I hope you're on the call, if not, you can log in and claim this account, is that you have the exclusive right to own this record that I'm looking at here. So obviously anything that you've submitted to CVCA, which is confidential, is not shared. But if you have information that you would like to use, such as you're in target check size or verticals, that makes it easier for entrepreneurs to find you, you can do that in Hockey Stick. So that just requires a login, which you already have as part of your CVCA membership. So that's an important part of the value that you're getting with your Hockey Stick account. A couple more things. I wanted to show you the an additional thing that you can do that's of interest to advisors or people interested in advisors, we also track and allow you to search on law firms, investment banks, accounting, audit firms, and when they're affiliated with a investment transaction. So this powers the leaderboards that are published from time to time with CVCA, and are quite useful from as kind of a advisory service provider search function. So that's also in Hockey Stick. So I'll end the demo just by showing you kind of the main Hockey Stick Pro interface. You can see that we're updating this every day with new funding rounds, companies. If you've contributed data in the past, you'll also see summaries of your own data here at the bottom. So you're getting quite a lot in one place. And I want to leave you with two kind of calls to action from this demo. The first is, if you haven't contributed data, always, we always strongly encourage you to contribute data. We try to make it as easy as possible to do that through the platform, and you have the full support of CVCA and Hockey Stick to do that. So number one is, strongly encourage you to contribute, and I think that, part of what I wanted to do today was show you the result of that. If everyone does share some data, it's really useful for the whole community and the whole membership. And the second thing is that, not everyone on the call may be on the data team and looking at databases on a daily basis. So the other call to action I wanted to leave you with was, if you think somebody in your firm has an interest in data, please reach out to Daryl or myself or Hockey Stick, and we'd be happy to show you how this platform can be useful to you. So I'm just going to switch back over to PowerPoint, and that's my contact information and a link to finding out more about the database platform. And that's it for me and Hockey Stick. I'm going to pass it back over to Daryl.
Great. Well, again, thank you for your time for listening in. I will remind everyone that all the content we talked about today, as well as the materials we're sharing with you, are embargoed until 6 a.m. on March the 11th. It's been a great year, and looking forward to 2020 and more of the same.